lot of exciting things are happening. And so let's get on to it. Let's get going. The market update. Interest rates have pretty much, last month, Freddie Mac had interest rates at 6.26%. They're at 6.27% here. Can everybody see that, the Freddie Mac rate?
Yeah.
Can everybody see that?
Yeah.
Okay, great. Yeah, you can see that. And if you see the chart, if you go back, we're a little bit better than where we were last year, 6.27. Last month we were 6.26. So it's pretty good. But here's the bigger chart, in my opinion. This is what you got to watch, and we talk about it all the time. Is the 10-year bond. Oh, son of a gun. I'm sorry, guys. This YouTube Live just isn't coming out right now, and I'm a little frustrated by that. So I'm a little
Taking that back.
reacted.
And we can see you, Flint, now.
Nice. Okay. Trying to.
All right, great. So you can see here is the 10-year bond. The 10-year bond broke through 3.982. So what that means, it broke through 4%. And if you look back in the last year, you'll see here in April of this year, it got to 3.86. Here it got to 3.97, 3.98 today. This is CNBC. That's a critical support level for the 10-year bond. So what we're going to probably see is mortgage, if this continues on this path, which it appears to do, and the reasons for this are several. I mean, there was some bad bank earnings news last week, and some banks had some bad loans, big write-offs, regional banks. There's anticipation that the Fed's going to reduce the Fed funds rate next week. So there are things that are happening that are leading towards people trying to flock to safety. And when there's uncertainty, they're going to flock to safety. They're going to buy more bonds. They buy more of the 10-year Treasury, and then the yield on those, because of the demand is gone up, the yield starts coming down, and that's what we're seeing here at 3.984. So this is a critical level. Once we get underneath this, and we've tested it a couple times, for those of you who know, I'm an armchair technical analyst. But for those of you who know technical analysis, you'll see that we're testing the bottom here. We've tested it a couple times, 2-3 times over in the last year. And once we break through this, which we may, you may see further dip in rates. Right now, mortgage rates, according to Freddie Mac, are in the low 6s. If we get this a little bit lower, then you're going to see the 10-year bond. You could see mortgage rates breaking 6%. And NAR has come out and they said if mortgage rates break 6%, they foresee that activity is going to pick up. They foresee that more buyers are going to enter the marketplace if rates are in the 5s. We're just at that cusp. I mean, I've done a couple deals here in the last couple weeks. People have locked in at 6.125. So we're really close to that 6% level. And this is getting there. And once we break 6 and we get into 5%, you're probably going to see a lot more activity. So I let you know that because we may actually see a little bit of movement here on the bond. Once this broke, and I've been watching this for a long time, all these months, was in the 4s, 4.46, whatever. Just didn't have enough strength. And now it's weakening, boom, boom, boom. So we may start seeing a little bit of retracement in rates. Now, with that said, there's always a spread, right, between the mortgage-backed securities and the yields. And so we're going to have to wait and see what that spread is. If the spread stays wide, well, then we may not get as much of a relief in mortgage rates. But if the spreads start narrowing, then maybe you're going to see a little bit of it. So that's what we're seeing in the market. That's pretty exciting stuff as far as mortgage rates go, because yeah, if we break this, we've broken 4%. Looks like we're going to close under 4%. In fact, we did close under 4% today. That's huge. That's huge. So anyway, we're going to see how that plays out. Any questions on that? Yeah, that's pretty exciting stuff. We're going to see how mortgage rates, if mortgage rates fall, then we're going to get a little bit busier, and you're going to start seeing some refinances for people who bought in the last 2-3 years, what have you. Now let's talk about other market conditions. Is the government shutdown? Has the government shutdown affected any of us?
No.
No.
Has anybody seen it affect any of us at all?
We're still writing checks to U.S. Customs.
Yes, yeah. That's just it. It's so in the mortgage marketplace, and I know they were having questions about whether, tax return verifications were going to be delayed by the government shutdown, but I'm funding loans. I mean, I don't see anything slowing down. I don't know that anybody else seen anything slowing down. So there's talk about the government shutdown. Hopefully they'll resolve it this week and what have you. And there are other issues for sure. Definitely those people who may not be getting checks, obviously they're in a tough spot, no question about it. And their ability to purchase certainly is an issue. But from the finance side and from the funding loan side, I don't see anything slowing down. And I just wanted to see if anybody else sees anything slowing down from their side. We're funding loans, and it seems to be okay in the mortgage space. Everybody seem to agree with that?
Yep.
Yeah.
Yeah. So one other thing that's a little bit kind of interesting is, and let me just check to see here. Okay. Is Flint brought this to my attention, but I kind of knew it anyway. Let's share this screen. Where is it? Oh, I saved it. Son of a gun. Let's see if I can find it. That's not it. That's not it. Oh, that's not it. Huh. I wonder what happened to it.
Too many
Let me
thousands of
go back.
emails that I copy you on.
Yeah. It's a good one. I have it here. Hold on. I can find it. Let me see here. It has to do with the CFPB. And if I can find this article, here it is. It was in
The
Scotsman Guide.
Scotsman.
Yeah, I got it. All right, here we go. Oops. You're still seeing the 10-year, aren't you?
You see
No, it says
Scotsman
Scotsman
Guide.
Guide.
Oh, you are
White
seeing
House
Scotsman
Budget
Guide.
Director.
Okay, good. All right, great.
White House Budget Director aims to
Yeah.
shut down.
So the White House Budget Director, Russell Vought, who is in charge of the CFPB, has no intention of parlaying it into a long-term gig. In fact, he envisions the CFPB not existing at all in 2026.
Yay!
So the CFPB has really changed the way we do business, right? I mean, we've got lender paid comp agreements, we've got borrower paid, we've got 3% points in fees cap. The CFPB is the regulatory arm for all that. TRID is still going to be there. They didn't say TRID isn't going to go away. They said the CFPB may go away. That's interesting. I mean, how's that going to affect things? Now, this article goes on and talks about there's litigation as to, the administrative agency may not be able to unilaterally get rid of the CFPB. It may still have to go through Congress. But very interesting that this is something that's going to come up here in the next few months, is that the CFPB may end up being entirely shut down. And how's that going to affect our business? How's that going to affect the way we do things? I don't know yet. I mean, I think that from an audit perspective, the small brokerages get audited by the states mainly. I know the bigger houses get audited by the CFPB, so I don't know that that's going to have an effect for the smaller brokerages. But for the business as a whole, I don't know. I don't know. Are they going to then come back and revisit the lender paid and borrower paid? And, are people going to be able to charge on the front and the back for loans? I don't know. I don't know how this is all going to play out. But
Wild West.
yeah. It could be. Maybe we're going to go back to YSP. Remember the yield spread premium, which was the way we did business for a long time. So anyway, very interesting stuff that is happening in the marketplace right now. Any
Well, the
questions on that?
Yeah, the rules are still there. They
Right.
haven't been rescinded. So that makes it pretty dicey to not follow the rule because there's no enforcement available, but I'm not playing on that side of the fence.
No, of course not. But
Um,
we're going to be competing against people who will.
Yeah,
Yeah.
no, and then the states could step in as far as enforcement. And
And
then
then it
you
just
have,
depends on the state, right?
no, you end up with a bunch of rules from a bunch of states. Doesn't sound like fun to me.
No, yeah, that's right. That's exactly right. And it becomes varied. And, for those of us who are licensed in multiple states, it becomes a little bit more of a challenge, to say the least.
Right.
So anyway, that's something to pay attention to. We'll see how that plays out. And okay, great.
Hopefully, it ends up as the greatest entrepreneurial way.
Well, we'll see. We'll see if that's the way
Yeah, I
it
don't know about that.
plays out. I don't know. So, all right,
Yeah.
okay. What's next on my agenda? All right, one of the things that I teased in the social media post about today's meeting is divorce and how to keep the same rate. So this is something I just learned, but in most instances, when a couple is getting divorced, the only way to get one of the two spouses out off the note is you'd have to refinance the note, right? You have to refinance the note to take their name off of it. But there's all these folks that have these 2.99% rates. And if they refinance at our 6% rates today, they're going to be in a tougher spot. Their payment's going to almost double from what it was. However, I learned that many servicers are making exceptions for divorce. If you are in a divorce and you send a divorce decree to your servicer, they may allow you to assume the mortgage and remove your spouse. Then you can keep the 2.99% rate without a refinance. Huge. We've never had this before. So, and I've had another LO who I know, he told me about this. It's pretty significant. So once again, if it's in a divorce situation, in the past, we would have to refinance to take off the spouse, send in the divorce decree to the servicer, and they will then evaluate whether you can assume the mortgage. I have a client right now that's going through this right now. And we're going to see in the next, they tell them about 40 days for it to take effect, to process it. We'll see how it plays out. But anyway, that's huge. I mean, because now people, instead of looking to sell their home as a result of a divorce, they may be able to stay in it, keep the low rate, maybe get a second mortgage to settle with the other spouse and move on. So that's kind of a big news on divorce.
That's only conventional. That's only conventional.
I've only seen it in conventional.
Yeah.
I'm not sure about government loans, Mark.
Yeah.
I'm not
Yeah.
sure about VA and FHA.
Yeah.
But I guess you'd have to check with that servicer, right?
Yeah.
I mean, because with VA and FHA, there's another level of insurance, FHA insurance for sure, another level of review, but I'm not sure.
Right.
But I just, that's great advice for somebody.
Yeah.
Another thing I mentioned about what we're going to talk about today is low appraisals. Now, most people on this call know about low appraisals and how to handle low appraisals. But what happens if you have a low appraisal? Well, so let's say you have a home, you're under contract, it's $800,000, and the appraisal comes in at $750,000. So it came in low. Lenders, as we all know, will only lend to the lesser of the contract price or the appraised value. So if you're putting 10% down, they're going to look at 10% down off of 750, not 10% down off of 800. So if you get a low appraisal, you could appeal to the appraisal management company. That is something that is an option for you. But many buyers may not want to do that because they have an out in a contract if the appraisal comes in low. And the seller may say, hey, I'm trying to keep you in the contract. Maybe they can negotiate a price between the 800 and 750, and maybe they can come up with something in between. But many contracts say if the appraisal comes in low, the buyer can walk away and get their earnest deposit. So anyway, with low appraisals, the point is, and as we were broadcasting this out to YouTube to the public, because I know most people on this call know this, is that the lenders will use the lower of the appraised value or the contract price. And if you're putting 20% down, 25% down, they'll do that off the appraised value. So it'd be, in my example, 25% down off the 750. So anybody want to comment on that or have any history or stories on that? Nobody? Okay, great.
I met with one of my realtors last week, and she said they're starting to run into the appraisal issue.
That's why I bring it up, because it's just now starting to come in, because we're starting to see appraisals starting to be low again. They're not, we were in a buyer's market for a while, and now we're in a seller's market. Well, not quite. If the rates come down, we're kind of like right in that area right now, at least in Arizona, where it may be shifting. It's shifting a little bit more towards seller than buyer. You may not be able to get, like we were talking about several months ago, those big concessions or those big buy downs, $20,000 to do a 2-1 buy down or whatever. We're not seeing as much as that right now. Things are starting to shift. What are you seeing in California, Clay? About the same? Your mic's off.
Yeah, it seems to be shifting a little bit.
Yeah.
We just got two appraisals in. One was high and one was low. So
yeah. So that's what we're starting to see a little bit. And so in those cases, then you're going to have to probably go back and renegotiate, is what a lot of people do if they still want the house. So, and then sometimes they'll renegotiate for the appraised value, or sometimes they'll come up with something in between, knowing that the borrower would probably have to make up that difference between the appraised value and the purchase price.
Yeah.
So, okay, moving on. One of the other things I said about today, we're going to talk about how it's easier to get a mortgage. It's easier to get a mortgage today. What do I mean by that? You may say, with all these regulations or whatever, how is it? I mean, you still need to prove income. You still need to prove assets. There was an old acronym I came up with years ago called the acid test at lending. It's assets, credit, income, down payment. You need to have all 4 of those things in order to get a mortgage loan. However, we're starting to see different types of loan products coming out. And I always say that you will see a variety of loan products when business gets slow, because the lenders still have people, they have to pay salaries, and they're trying to get loans out or whatever. So when business comes slow, you get to see a lot of different products. Well, there are no income, no employment verification loans. And that's what I mean by easier. If you do not have a job, you got a good credit score, about 700 or so, you could get a loan. We just closed one. I mean, you're going to have some money in the bank for down payment and some reserves and what have you. But there are lenders out there that are making loans if you don't have income. This is really good for those people that are self-employed, that don't show a lot of income, that are retired and no longer have a job, and are trying to get a loan. But it's a great product, and it's kind of reminding me of 05 with the no ratio loans. But anyway, that product's out there. It's primary residence. It already exists for investor property. They call it a DSCR loan, a debt service coverage ratio loan, where they take the rental income and they compare it to the mortgage payment. And if the rental income, the market rental income from the appraisal, exceeds the mortgage payment, then they figure that, okay, you can it meets the debt service coverage ratio, and then you can get a loan. However, in some places like Hawaii, Bill, it's harder to find market rents that are over the mortgage payment because mortgage payment may be high. And so I did a loan in Hawaii where some lenders use something called Air DNA, which is an average of the short-term rentals, because short-term rental rates are higher than regular market rates. And some lenders will, on a debt service coverage ratio loan, will take the short-term rental rate, compare it to the mortgage rate, and then make a loan on that. And there are some lenders out there that'll do that. So if you're doing a DSCR loan and you're finding it's hard to get the market rents over the mortgage payment because the mortgage payment's so high, there are some lenders that'll do this thing. It's called Air DNA. It'll be short-term rental rates in excess of the mortgage payment. Pretty slick.
I didn't know.
So that's another reason why I say it's getting easier and easier to get a loan. Another item is, let's see here. Somebody that's retired and they don't have an income stream, they can set up a distribution from their retirement account. As long as that distribution meets 36 months. So, if you have $360,000 and you do 10 grand a month, that's 360 months. Then they'll say, okay, you can do that 10 grand per month because you have enough in your retirement account. We can use that income, and we may have to actually show one draw before closing in order to show the income component. There's asset depletion calculations. Well, they'll take like Freddie Mac has a calculation. Well, they'll take your retirement assets and they'll divide it by 240 months, and that's your income number. Private money, in many instances, like what Alan works on, if it's an investor, they don't even check your income. Now on primary residence, they will, but on investor, they won't. There's also income based on pension, disability income, Social Security. There's bank statement loans for self-employed individuals. I've done a number of these. Bank statement loans are great. They'll take 12 months of your deposits. And they can do those on second mortgages now too. So not only can you do that on a first mortgage, but on second mortgage bank statement loans. On VA loans and reverse mortgages, they've always had residual income calculations, which is more than DTI. So in any event, there's a lot of different products out there, and it is becoming easier to get a mortgage. So people who are looking to get mortgages, combine that with if rates start getting down a little bit lower, as we saw the 10-year got underneath 4%. So when we meet next month, will the Freddie Mac show the 30-year under 6%? I don't know. So we'll be watching. And that may then mean there's more buyers. There may be more instances in which people are trying to find a loan, but there's more ways to try to get them qualified. And so anyway, it's just, it's a good time to get real estate because there's lots of different ways to get it. So any comments on that? Great. Speaking of mortgage rates, I want to talk about factors that go into a mortgage rate. And as you know, this is on YouTube, so I wanted to provide this to some of our viewers so they know what goes into determining a mortgage rate. Because they may say, hey, why is it that, we aren't getting these, why is it that the rates aren't coming down or what have you? And I have this here somewhere. Let me find it. Okay, I'm going to do it this way. So I'm going to go to here. Let's share the screen. Let me get out, get back in, share the screen. Okay, everybody see my Google screen?
Yep.
Yeah.
Okay. So we're going to go to councilmortgage.com. You guys may be familiar with that website, and you may not be. That's okay. Council Mortgage. All right. We go to blogs. I do write blogs, and so does Mike. Here's Mike's blog from last month. But if you go down here a little bit, I actually wrote a blog on factors that go into an interest rate, mortgage rate. So, Mike, if you ever want to check where your blogs are, you can check them on the website for sure.
I've done
They
that.
also make their way to social media as well.
I was looking at the library for those
Yeah.
for, the last time. You know how long I've been writing those?
Long time, man.
You know how many hundred are in there?
Yeah. So I tell folks this is a glossary. If you click here on blog categories, you can find 10-year note, adjustable rates, anti-discrimination. If you're looking for anything relating to mortgages, we got we've been writing on this blog for a long time. Here's mortgage rates, factors that influence a mortgage rate. Oh, there's a little typo there. All right, there are a number of factors that go into a mortgage rate quote. Occupancy type, whether it's a primary residence, second home, investment property. Rates for second homes and investment properties are typically higher than a primary residence. How much is your down payment equity in the property? What is your credit score? Because you may have people saying, hey, I heard so and so has a 5.875% rate. Why is my rate 6.125? Well, here's a good list of reasons why. What is the property type? Single family, townhome, condo, manufactured home? Are you providing full documents for qualification or alternative documentation? What type of loan are you applying for? Conventional, jumbo, FHA, VA, USDA? Is it a fixed rate or adjustable rate mortgage? What's the loan term? 30 years, 20 years, 15 years? Is there subordinate financing, such as a line of credit? If there's a first and second mortgage, sometimes the rate's a little higher. Where's the property located? Some rates could be a little bit higher than in some states than other states. Are you a U.S. citizen, permanent resident, alien? So these are all factors that can go into a mortgage rate. They're in our blog, and it's something that it all goes into the risk. It all goes into the risk of the lender trying to evaluate, how much they're going to, at what rate they're going to lend it to you. And these are all different things that they go into determining, the interest rate. So everyone, when you hear that your buddy's got a certain rate and you're like, hey, why does my buddy have a rate and I don't have the same rate? Well, there's lots of different reasons why that may be. I mean, credit score, is it your primary residence? Is it, are you getting a second mortgage with the first mortgage? Where's the property located? I mean, there's so many different issues. So anyway, there's a lot of factors that go into the mortgage rate. When we shop as a mortgage broker, all that is already determined when we find the rates for you, and and we provide wholesale rates. So those are factors to consider. We were talking earlier about different types of loans, bridge loans. I'm seeing more of those. One-time closed construction loans and spec financing. There is spec financing out there. There are lenders that will lend on spec that are not hard money, quasi hard money. So there's a lot of different products out there, and it just really just takes a little bit of digging from the brokerage side to try to find them. But they're out there, and it's pretty good. Anybody want to comment on any of those? One-time closed loans, spec financing. Okay, let's just kind of go around now and see what people are working on. I'll tell you that I did I've closed on bank statement loans, on the no income, no employment loan. I did a first-time home buyer. I've done, and I've got a couple of just normal, like regular vanilla type loans I'm working on too. So I'm getting kind of a variety. What's everyone else seeing out there? Anything? Nobody wants to share?
I'll go first. I'm
Yeah.
working on some hotel bridge loan to permanent financing. So
That's
one
great.
guy has 12 hotels, and so he's restructuring some of them, and that those should come to fruition before the end of the year.
No, that's great.
Not all
Anybody
12,
else?
just three of those 12.
Yeah.
Yeah.
That's great. Anybody else?
Just been busy with hard money loans. This has been these last couple of months have been really good. This for business wise. Seeing a lot more business actually from places like Yuma, Sholo, Overguard areas, also Cottonwood. So I have been doing more marketing actually in those areas as well. So I'm seeing some fruition from that. So
No, that's good.
So I've been liking that. But Mark, I do have one small issue. You wearing that Green Bay shirt after you beat the Cardinals late yesterday. Yeah, you lucky dog. That's all I
You
gotta
know,
say.
it was the only gray shirt I had, and this came from my mother-in-law.
Oh, okay. When I saw that, I go, really?
I know.
You do know
Well,
this
that's all right.
is
The Cardinals have
Wayne
only
the
lost 5 in a
Cardinals.
row.
Yeah, no, I kind of watch the Cardinals now. I mostly diddle in the kitchen with it on in the background.
Funny, funny.
Couldn't believe
Anything
you
else?
lost that game.
You know, I now that it's cooled off, I'm starting to go out and hit some open houses and try and kick some tires. And
Oh, good for you. Yeah,
yeah, they get excited when you walk in because they actually think you're somebody looking to buy a house.
Oh, it's good.
And I diffuse that immediately. But you know, just a little bit of frustration. Not a whole lot of track is what I'm hearing. I only hit 3 yesterday. There weren't that many open, but I went and hit them. When you walk in because they actually think you're
That's great. That's great.
exactly. But it was good. They were good, friendly meetings, and we'll see what comes from them.
That's great. That's
Yeah.
great. Yeah, that's like the old tried and true way. That's the way I built my business. Was just going to open houses, meeting people, saying,
Yep.
"Hey, we can help you." Mike, anything happening in Indiana? What's the temperature in Indiana, by the way?
Well, as I look at my on-screen thermostat here, it says it's 62 and sunny. Feels like it's about 43
All right.
and windy.
Well,
You recall the fellow we talked about last week that thought he wanted to buy a gas station?
yeah.
Had a long talk with him, and the station's in Scottsdale. And I haven't penciled one of those out for a while, but he identified a particular station for me on Biz by Sell, right? The asking price, and it had in the advertisement, it had some of the operating data on it. And what I noticed is, and I ran through it with him, and the long and the short is that his debt service coverage on with his 10% down, which is what he wanted, his debt service coverage is 1.02.
oh,
Which you need about 1.2 or better. And so what that translates into is overpriced property. You have to work through the business and the real estate values and whatnot. But if a lender was willing to come in and give him that 90% financing, and he would be at, I figured prime +2 on a VA loan. Did a lot of them back there when I was doing that at 1.75 to 2.25, something like that. But I just ran it at 2.2% or 2% over prime. His return on equity for his 10% down was 0.14%.
oh.
So I told him, I said, well, the issue isn't really whether I can finance it or not. It's whether you want to expose, in this case, it would have been something over 500,000.
Yeah.
You want to put 500,000 out there on the board for 0.14% return.
Yeah.
And he's still, that was conversation, and there was more to it than that. And I put that out in an email, just back of the napkin kind of calculations. And then I talked to him, I guess, the next week, I guess it would have been the last week. And he's still looking. But what I noticed out of that, and again, this is Scottsdale location, it's a different station, but it's one I happen to know from being back there. So I knew the address and the history on it and a little bit about it. And it's a great location, but it's an old piece of bricks and mortar. Old. Been refurbished, and it's got a new brand on it, and I think they put new tanks in, as I recall, that kind of thing. But it's still old. But what I've noticed is the premium, what I call the premium for the zip code, and you get that in Scottsdale. Paradise Valley also has it. Fountain Hills. Interestingly enough, Flagstaff has it. Okay. So that station, if it were going to be priced so it could actually be done, I think I figured out that it should probably be priced I forget the number, but it worked out to be about 4.5 million as opposed to 5.5 that was being asked. And percentage wise, that's the premium you get. It's actually priced more like if it was on somewhere off the freeway over in California.
No.
So, but that hasn't changed in the last couple of years. So whatever else has been going on in the gas patch or in commercial real estate, and all you hear about it, hasn't translated into lower prices and lower cap rates and all that kind of thing, at least in the gas station segment in Scottsdale or in the Phoenix MSA. I guess outside of Phoenix, even Tucson. Tucson is a notably softer market in terms of pricing, but they're very, very aggressive in and around that area where you happen to live.
Yeah, there's no slowdown in people trying to buy gas stations. Gas isn't going anywhere, even with all the EVs.
Well, I'm guessing, and again, I don't know this because I'm not there right now, but for the last 20 years, there's been a healthy amount of consolidation of ownership in the gas station business back there. And that includes the jobbers. I know when I started, I think there were probably, at the wholesale level, jobbers, there were probably 15 to 18 jobbers. And there were some small ones that, they'd operate out of Flagstaff and only cover the northeast sector or something like that of the state, maybe drift into Utah or something of that nature. And I think, when I checked out here a couple of years ago, they were down to maybe 4 or 5. Mm-hmm. And a couple of them were over in California that had come over here and bought up, so they aren't properly Arizona companies anymore. But there's been that consolidation at the retail level as well as at the wholesale level.
Have you watched Landman?
No.
Have you heard of Landman?
I think I have.
Taylor Sheridan. It's about the oil business. It's a fun show. They're going to have, there's one season down. They're going to have another season coming
is that
up,
on Netflix or something like that?
Yeah, I don't know if it's.
Or what's the other one? Premium? I forget.
It's on Paramount.
Paramount? Huh. Okay. I think I saw the ad for it. I haven't seen it.
Good show. Have you seen that, Bill?
Yeah, it's great.
Yeah. Good show. Yeah.
I didn't
All right.
realize there's another season coming up.
Yeah, in November. Yeah.
Cool.
All right. Well, that's the Eastern time zone. So let's go all the way out to Hawaii. And the Hawaiian 6 hours earlier than Indiana. And what's happening in Hawaii?
Well, actually, by the way, if you're 6 hours earlier, it's going to get cold here in a little bit.
Mike can tell Mike can tell the future for you.
Yeah, just call me. I'll tell you if it's going to rain or not.
Yeah.
I want to know what the Monday Night Football game score is.
That's a good one.
All right. Actually, I at the end of last month, I just closed a first-time home buyer. Was really very gratifying. It was a friend of mine, and I was able to help her get her into her dream home. She was just so happy, and single mom, and really wonderful opportunity. I mean, it made my feeling like I love this job. It was one of those things.
I agree.
When you feel really gratified, I have another client that I did a reverse mortgage for about 2 months ago. Is so enamored with what happened. He called up, invited me on a date, and he's taking me out to my favorite restaurant in Honolulu, and then we're going to a magic show afterwards. He's got his front row seats for the magic show, just as a thank you. Again, it makes you feel wonderful when you can do that kind of thing in this business.
Yeah.
Right now, honestly, I'm in a little bit of a drought. I've got to get out there and beat the bushes or something. Got to get something going,
Well, I'm trying to do what I can here with the rates. I keep trying to influence the rates.
I've
doing
got
these market recaps saying rates are going to come down.
I've got 2 or 3 people just biting at the bit. Bill, when are we going to be able to refinance?
Yeah.
and I want to make it a smart decision for them. Would everybody agree that when the rate drops a full point, that's the time to think about it?
Yeah, that's a rule of thumb.
Okay.
But you still have to do I think you still have to do the calculation.
Yeah.
There's a lot of things that go into a refinance.
Of course.
Not only is it the cash flow with the lower payment, but some people say, well, I'm starting my amortization schedule all over again, so I'm going to pay all this interest over time.
Yeah.
So if you look at that too, sometimes they want to have a shorter time
Sure.
period. Instead of 30 year,
Sure.
maybe 20 year or 20,
Yeah.
15 year or whatever.
Yeah.
So there's different things to look at.
Yeah. And I got all that in mind, but I thank you guys.
Yeah, no, thank you, Bill.
I
And
appreciate.
to your point, I completely agree. I mean, that's, I used to as you guys know, I used to litigate and I used to argue with people every single day. And then when I got here, I get to help people. And as we say, everybody that comes to Council Mortgage, and we've talked about it, you're here to help folks. That's why you're in the business. And if you're coming to Council Mortgage, that's what you're here to do, is help people. And we do it every single day. And it's good stuff. It's very rewarding.
Wish I started this years ago. I
But
really
you're
do.
here now.
Yeah.
You're here now.
Yeah.
So
Anyway, guys,
Nicole, I know Nicole is bashful. She's on, you can't see her on YouTube, but she's just listening in. I don't know if there's anything she wants to say. Many times she'll just text me or chat. If she does, she'll do that. Chica, I don't know who Chica is. Chica, you want to say anything?
I'll go Sherry.
Sherry, hey, it's good to hear you.
I know, I can always tell when somebody's not from Chicago. They call me Chica Go Sherry.
No, Sherry's in Tucson. How's things going in Tucson?
Actually, they're going okay. I've got one that's coming in, a second home, and a reverse mortgage that I've been working on all my life.
Well, those are good. There's one thing, I was talking to somebody today and we were talking about just, the mortgage business as a whole and whether things are going to slow down or pick up or whatever. And just I think simple demographics have a lot to do with a lot of this. And the older generation, which is the baby boomer, was the biggest generation, right? The greatest generation, whatever, is the biggest generation. Not the greatest was their parents, but the baby boomer was and there's going to be more people in that are now from that generation that can qualify for reverse mortgages. So you're going to see a lot of reverse mortgage products out there. I know we've got a couple going here, and yeah, and they can be used to purchase a home. They can be used to refinance. It's a great financial planning tool, and many more financial planners are coming around seeing the benefits of a reverse mortgage, especially on people with fixed income. So,
Exactly.
yeah, no, that's good. That's good. All right. Well, that's pretty much everything I had for this month. This will be on YouTube. It's broadcasting live right now on YouTube, and usually takes a day or two before the recorded version to show up. So you can always let your clients know, and it's it lets people know that yeah, we're here and we kind of know what we're talking about. So you can certainly share it with people and let them know, yeah, we're here. This is what we do, and we do a lot of different things. I know I talked to all of you individually, and I'm really excited a lot of the different things that you guys are doing. I know you work hard too. So anyway, but
We need to schedule a show.
we should do that. We should do that.
Okay.
Sherry
tell me
has a
when.
radio show, a podcast, and we can do that. Yes, we can do that.
Okay.
Next month we're going to have a roundtable. I haven't decided about December yet. Usually we don't because we have our holiday lunch, but we'll figure that out next month. So unless anybody has anything else to say, let's keep watching those rates. The 10 years under 4. Let's see if we can get the mortgage rate under 6. And I will see you all next month.
Thanks, guys.
Thanks, John.
All right, take
Thank you
care.
very much.
All right, see you.
Take
Bye.
care.
Bye, John.
Happy
Bye-bye.
Halloween.
Yeah, be scary. Don't be scary. Right.